Thrust, mass, orbital mechanics, tangible physics.
Right, the actual hardware.
Yeah, exactly. But if you look at what just happened with SpaceX entering the public markets, we aren't talking astrophysics today. We are looking at a massive liquidity event that, frankly, completely stressed the standard plumbing of Wall Street.
Oh, it's a structural market earthquake. I mean, SpaceX just executed the largest U.S. IPO in history. They raised $75 billion and hit a $2.2 trillion valuation on day one.
Which is just staggering.
It really is. And to understand how the stock gapped up, 19% from its $135 IPO price to close near 161, you really have to look at the unprecedented retail pipeline.
Right, because this wasn't just institutional desks quietly moving blocks of shares around, was it?
Not at all. The volume was insane. Over 500 million shares traded hands. To put that in perspective for you, SpaceX alone traded more dollar volume on Friday than the QQQ and SPY ETFs combined.
Wait, combined? That's incredible.
Yeah, combined. And VantaTrack data shows net retail buying was 3.5 times higher than what we typically see with NVIDIA.
So picture this. You've got Robinhood experiencing record traffic and major latency. Retail investors are putting in orders for, say, 1,000 shares, and they're walking away with maybe 17.
Exactly. It's like trying to shove a stadium full of eager buyers through a single subway turnstile.
And that turnstile squeeze, that's what creates a highly fragile cost basis distribution. Basically because retail buyers got into the stock at vastly different prices and in incredibly small allocations, there is no solid floor of support if the stock starts dropping.
Right. Let's do the math on that risk for a second. If you were an investor who actually managed to snag 10 shares at the $135 IPO price, your nominal paper gain is roughly, what, $260?
Right, it's a tiny nominal buffer.
Exactly. So a single bad macroeconomic headline could trigger mass panic selling just because people want to protect that tiny profit. Meanwhile, the momentum traders who chase the stock up to its $176 high, they are already completely underwater.
Oh, wait, I have to push back here. We saw retail investors diamond hand GameStop through massive volatility, right?
Sure, we did.
So why wouldn't they do the same here? Why assume they'll just, panic sell instead of holding on for the long haul?
Because the structure of this trade is fundamentally different. It's not just retail holding shares. We now have 25 newly registered leveraged SpaceX ETFs hitting the market at the same time.
Oh, right, the leveraged product.
Exactly. These funds are designed to mechanically rebalance. To maintain their double or triple exposure every single day, they are mathematically forced to buy high and sell low right at the end of the trading session.
So instead of a static group of holders just weathering the storm, these leveraged products act like a slingshot. They get pulled back further with every trade, which just amplifies the intraday swings.
Which creates a highly